hair like that? It's a, yep.
Yes.
There you go.
Maybe one more.
There you go.
Okay.
Roll it down a little bit.
So is alpha dead?
I don't believe so. There's really no shortage of opportunities and alpha generation in our view. And since 2010, the fund has returned 18% per annum. We're up 22% net fees this year and 18% a year over the 10 years life of the fund. So we're finding plenty to invest in.
Has it gotten harder to find it?
Yeah, let's talk about how we generate alpha, if that's okay. Well, for us, we generate alpha through a number of ways. Firstly, understanding the sustainability of business models, understanding business models and taking a long-term horizon over which the persistence of high barriers to entry plays out, very much in the philosophy of Warren Buffett. Secondly, we have a deep sector expertise in some sectors, including infrastructure and consumer goods, which help us to understand when opportunities are good. Thirdly, we run concentrated. Positions can be in excess of 10% of NAV, and so by concentrating our capital in a handful of very good ideas, where we find the alpha, it can mean something and can outperform. And finally, I'll mention the issue of being prepared to be activist, which is an inefficient space where few people are willing to do that, and we're willing, where appropriate, to be activists. And so that combination of taking a long-term view, which gives us a time horizon arbitrage, sector expertise, understanding business models, the corporate governance expertise, and the concentration, the combination of those factors has allowed us to generate consistently high alpha.
Now, can you just talk a little bit more about why you think the activist space is inefficient?
Well, firstly, where there's a corporate governance concern, investors just tend to stay away completely. They don't try to say, well, what discount should I apply? And they just completely stay away. An example is News Corporation, where we made a very large investment a couple of years ago during the hacking scandal, where the stock traded at extremely cheap valuations, 4 times operating profits. It was worth triple. And investors said, well, I don't want to invest in a company that has hacking phones. Who knows what the liability might be? And we said, well, the liability, we can't tell if it's $20 million or $10 million, but $50 billion was discounted. And so it didn't matter.
Right.
So, and so for us, there was a price. And secondly, we understood that there was an inflection point in corporate governance as a result of the scandal, where they decided to buy back a lot of shares, break the company up, and have a new COO, Chase Carey, run the company. It is an inefficiency, and also that can be exploited because investors just say there's no price. I think of it like the damaged goods section of a department store, where you can get 80-90% off, even though, because most people won't buy anything that's damaged. And also, hardly any investors will be activist because it's a reputational issue for them, and they think that no company will ever talk to them again. And so there's a dearth of investors willing to be activist. And so
few competitors.
Few competitors.